Alright, welcome to our weekly update on the Australian property market, where we discuss waves, impulsive waves and corrective waves around Australia. As promised, today we are going to discuss why I believe the RBA is going to raise interest rates next week. The RBA has left its key interest rates unchanged at 4.1% for the past 4 months. Apparently, markets are pricing in about a 1 in 3 chance that the central bank would lift the cash rate to 4.35% at the November meeting. There are multiple reasons for that if you ask people around. First of all, the inflation is up 1.2% in the September quarter, which is higher from 0.8% in the June quarter, above the expectation of 1.1%. At an annual rate, headline CPI was 5.4%, compared with 6% in the June quarter. Again, the prediction was that the annual rate come in at 5.3%, dropping further from the peak in the December quarter of 7.8%. And in my opinion, 0.1% isn't much, but any reason is good to justify the hikes. The second reason is immigration. Quote, "The arrival of 500,000 migrants over the past year is adding to inflation pressure and will influence the Reserve Bank of Australia's interest rate decision next week," a former RBA economist says. As expected, there will be more people chasing goods and services that leads to higher prices. I'm going to run a separate video on migration, how it impacts our economy and house prices. The third point, in the long run, the Australian bond yields are going to get weaker. Basically, we're going to chase their yields. As a result, the Australian dollar is going to get weaker for a little longer, which is also inflationary. We're going to continue on with importing inflation from the US. However, in the short term, spanning perhaps until January 2024, you should expect a bump in the Aussie dollar. When you look at the Aussie dollar versus US dollar chart, we are forming an ABC formation that is going to go temporarily higher, potentially as high as 10 cents, which is huge. So the currency markets are already sensing there is a hike in interest rates on the way. The question is, how big? Doesn't mean we should expect one higher spike of, let's say, 0.75% or 1%. Or for the next 3 months, we are going to get 0.25 or 0.5% hikes that match other economies. Because when you look at similar countries with similar housing issues, we're behind the curve. Our rates are at 4.1%. Meanwhile, in Canada, it is 5%, New Zealand 5.5%, Norway 4.25%, the UK is at 5.25%, USA 5.5%, Hong Kong 5.75%, and Zimbabwe at 130%, and Argentina 133%. In other words, we're way behind the curve, which gets reflected in a weaker Aussie dollar in relation to other currencies. Something that probably flashes red light at the headquarters of BIS in Geneva. Doesn't mean we are going to hit 0.5% or even 0.75% on a scale next week. Finally, when I look at the chart of sample postcodes in Australia, I see more pain and drops in price ahead. We should expect small corrections in prices over the next few weeks, as in many postcodes, we have already started wave 1 or wave 3 that are asking for a correction. So for example, the postcode of Ashgrove 4060 looks like has just started the third wave and is awaiting a small correction. Byron Bay may go as low as the June levels to hit the second wave. Bondi has already entered a second wave. Hobart is also entering the second wave. Please let me know in the comments below if there is any suburb that you might be interested in. So, as you can see, I'm seeing potential drops in prices across Australia. Markets do anticipate moves in interest rates ahead of the event. While I don't expect insiders to play a significant role in selling such illiquid assets, the technical analysis reads ahead of the game market moves, so we can prepare accordingly. Just follow the moves of politicians and RBA members and buy or sell accordingly. Meanwhile, stay calm and count waves.